Hey everyone, welcome back to the channel. Today we have a lot to cover, including a quick technical analysis of the S&P 500 SPX, which is currently down 1.72% as we speak. This market continues to be choppy with high volatility, making it difficult to find a clear direction. In this kind of environment, risk management is key. I've been focusing on strategies like covered calls, vertical option spreads to generate income whilst keeping my risk much lower. Now, I will share my thoughts on today's economic data as well and what this means for investors and traders. So the first thing is, let's see what's currently happening in the market, and I will share a chart to just share my insights. So on this chart, you can see that most of the tech stocks, particularly those that I follow, they are actually in the red. You can see that Amazon is actually 4.36% down. Now, NVIDIA is 1.71% down. But I'm going to do a quick analysis on S&P 500 index, which is the top 500 companies in the US. So for those who don't know, the S&P 500 is essentially the 500 companies that are publicly listed that come from different sectors across the US economy that are lumped together in an index, and they come from different sectors. Now, if I look at this chart that you see here, you can see these levels here. These are demand zones, and those in red, they are supply zones. Demand zones are those areas where usually when the security, in this case, the S&P 500 index, if it comes to this point, usually there's some resistance level because there are some extended buy levels. So what it does, it can potentially push the price up. But this chart is on TradingView, and you can see here, this is for a couple of months here, about 1 year. But you can see that the S&P 500, this was around in August. It was trading around at this point 5,117, and it has continued to go up. But if we look at how it has dropped, we can see that at some point the S&P 500 dropped by minus 10.54 from the high at that point, and it retraced a little bit up, and then now it's on a downward trend. And I'm gonna share my thoughts or my theories as to what I think is causing this. But one thing that is apparent is that the tariffs. So essentially, these tariffs that the US is planning to levy on other countries, so-called actually reciprocal tariffs. Basically, a tariff is a tax that is levied on whatever specific goods. But in Canada, because we have the auto industry, which employs over 500,000 people, mostly in Ontario, what has been happening is that there is uneasiness in the auto tariffs that have been pegged to take into effect on April the 2nd. But what is happening is that a lot of investors and traders, they don't really know what's going to happen, because you buy stock today and then it goes down even more tomorrow. So as a trader, if you are going long, that means you buy to sell high, then that means you can possibly lose money. So those bears, those people who are bearish, in other words, they are betting that the market is going to continue falling, are the ones that are making money. So now, these geopolitical issues and also people just, being unsure of what's really going on is putting this pressure on what is happening in the stock market. Now, how am I positioning myself? I think the first thing that I will say, I'll be the first one to say this video is for educational purposes. Whatever I'm sharing here, these are my strategies that work for me. Always make sure you do your due diligence before you invest your money or trade your money. So let's see. For me, what I've been doing is, for my trading, I've been paying attention to economic data. For example, I will do a quick breakdown here of the economic data. Today, there was economic data that was released on core PCE, but this whole week, there was a lot of data. For example, the global manufacturing PMI for March, it came lower than expected at 49.8. This shows a contraction in the manufacturing sector, a concerning sign of economic growth. If I look at the service sector, the S&P Global Services PMI for March, it came better than expected. So the service sector in this case, it remains strong, which could help cushion economic slowdown. The consumer confidence, it came down lower than expected, and the sentiment is weakening, possibly due to inflation concern, which actually came up higher than expected today on Friday when I'm recording this video. Core PCE, it came as 2.8 versus the 2.7% that was forecasted by analysts, which means inflation remains sticky, which could impact Fed policies. If inflation becomes a problem, the Fed has to either respond possibly by hiking interest rates or tightening money supply. What that means is those companies that have balance sheet that have a lot of debt might actually be on a difficult time if they are on variable interest rates in terms of their borrowings. So that's something that may potentially spook the market to go even down. Another interesting thing is that the initial jobless claims came lower than expected, 224,000 versus 225 that was forecasted by analysts. So no major surprises here, but the major thing is that the labor market stability is something I am keeping an eye on. GDP, it also came out at 2.4 versus 2.4%, which was something slightly better than expected because analysts were focusing 2.3%. Why am I sharing this economic data? As an investor, I want to look at the fundamentals of a business, a lot of things that I do to make sure that at least I invest in businesses that have low debt, that are generating income, that have growing revenue, and also that have a moat. And I want to invest if they are really discounted. In other words, if I have an idea of their intrinsic valuation, now if their price is below the intrinsic valuation, now that could be a good thing for me to buy and hold for long term. But this economic data generally shows the general state of the economy. So what I'm then doing is that investing, I'm looking at the long term beyond the Trump administration. So whatever companies that I may be considering, for example, I really like Amazon. In the interest of disclosure, I just bought some shares for Amazon, and this is by no means recommendation necessarily. But the idea is if I see profit, I can possibly take it, but it's a company that I'm comfortable to hold. But for the meantime, I'm gonna write covered calls. That means if I have 100 shares, I can sell an option, a call option, right? That's getting a premium. And if it hits the strike price, let's say right now it's at 198, $92, and I buy at that point and I put a strike price of $205, it means I can still make that upside profit. If it hits, let's say for next week, it hits $205, I still make the profit that would be in that case if I bought it $193 a share for times 100 shares. So that means that would be 10 plus 2, 12. So that would be $1,200. Plus, let's say if I get premium for, let's say, $100. So that would be another $100. So my shares will be called away. So I give up the upside. Let's say it's now $206, right? But if it drops, right, I can possibly, you know, mean that if I get the premium of $100 and I got in at 193, I would be still break even up to that premium level. So at the end of the day, that's a strategy. So if I can get, let's say I'm getting $100 every week, and I have 100 shares of Amazon and I want to hold it for the long term, that's the strategy that I'm using, right? And if I have, let's say, 1,000 shares of different companies and I can get $100 every week, I can possibly make some income whilst holding those fundamentally strong companies. Now, on my trading, I've been pivoting more on the vertical spreads. So if I'm bullish, I would take what is called a vertical or a long core spread. So for example, I took one for NVIDIA today, and what happens is I would have two strike price, let's say NVIDIA, let's say for NVIDIA 130 for that option, and also the other one for, let's say, $105. So as long as, let's say, NVIDIA closes that week, let's say if I take for, let's say, May 6th, if it closes above, let's say, $114, I could make 1,000 out of that 1,000 that I would have invested. So what that means is I open the position by selling one option and buying another one to cap my risk. And I've explained this in the video that is going to be going live on Monday, how I do that. And I gave specific example. So what that does, it keeps my risk in terms of the money that I will have played in that particular case. But at the same time, the risk reward ratio is much bigger. But for me, it was a quick trade. I got in and I got out. I made my profit, right? But it protects me if, let's say, it continues to go down or if it goes up beyond that. So I've kept the risk reward ratio in that case. So that's something that I've been doing. So that's something that I think is very important, risk management. So with so much uncertainty, position sizing is also important. And I like to put stop losses and also taking profits. Now, as I wrap up, I think what I would say is that if I am bullish, in other words, most of the time, if I look at the S&P 500, it has been going up, but there's no guarantee that it's going to continue going up. But what is happening with the tariffs and stuff like that might continue to happen. So for the long term, I am going to be considering just buying some high quality companies and holding. But for my trading, I'm very tight on my risk management, and I'm gonna trade options covered, not naked options, actually vertical spreads. If I'm right on the direction within a certain range, like I said, I can make money. If I'm bullish, I can do vertical put spreads. So if it drops within a certain range, I collect some money and do some covered call strategies. So that's what I thought I would share with you. But at the end of the day, nobody can predict the direction of the market with certainty, especially with political factors like President Trump's tariffs adding to the volatility. What works for me may not work for you, but always do your research and invest responsibly. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more market updates. Let me know if you have any questions in the comments and how you are navigating the market. See you in the next video. Bye bye for now.